Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, this is a chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you've been following along with the market guys each and every week, you'll know that I leave my lines on the chart from the previous week's forecast so you can see how well the technical signals have panned out. And this is the hard evidence of how well technical analysis works, especially when you're looking at the candle charts like we are right now. Now, again, last week I drew these lines here. You see these diagonal lines, and I'll zoom in a little bit more so you can see this. And last Friday, the market report went out right here, and I drew this line saying that early in the week we would most likely move up to test the high from that Friday's trading day. And then I said we would most likely drop down as we move back towards the 20-period moving average, which is that blue line. And you can see here that today, Friday the 21st, we came within 12 cents of my target price right there. And it looks to me like this gap right here still wants to be filled. So as we look forward to next week, let me just say that there's a couple of mixed signals that we're getting, but early on we're seeing a pattern of rallying early in the week and profit taking towards the end of the week. So this long shadow right here for the Dow on higher volume tells us that the buyers tried very hard to push the sellers back, and we closed very close to the high on this trading day. And that tells us that there's a good chance that early on next week we're going to move up again to test that high right there. So let me get my drawing tools out for you. I'm going to draw a diagonal line once again and say that we're going to move up, test that high, and I believe we're going to pull back just like that. Now, this little area right here is also a gap. So what happened today on Friday the 21st is we opened right here at the bottom of that rectangle right here, and it formed a very minor gap. And gaps fill, F-I-L-L, fill 80% of the time. So this little price gap is going to act as a magnet to draw the price back up, and that's why I think early in the week we're going to move up. Now, if we look at the Russell 2000, we have the same idea that we would rally up early in the week, and we did that. You'll see, here's my lines from last week. We rallied up Monday, Tuesday, Wednesday. We had a big up day right here. And then I said we would start to pull back. So what I'm going to do is I'm going to leave this line in place. This line right here with the price target at 14.16 is where that line ends. And I think that we're going to pull back on the Russell 2000. A little bit different than the Dow. The Russell 2000 is a broader-based index, covers 2,000 stocks, where the Dow covers 30. Now, the opposite has occurred here, where we have what's called a bearish engulfing pattern right here with a long shadow above the market. And that tells us that the sellers came in on the Russell 2000. So the Dow stocks got bought up, Russell 2000 got sold off. Very interesting how you got two different indices working opposite to one another. And that happens from time to time. Not all markets move in sync with each other. A lot of times they'll go opposite, and this is one of those cases where we're getting those mixed signals. So I believe we're going to continue to go lower with this bearish engulfing pattern. So the end of that line right there is going to be my target for the Russell 2000 next week. Same thing happened with the spiders. Look at this. The S&P 500 index did the same thing as the Dow. We moved up, followed my forecast lines exactly Monday and Tuesday. Wednesday we came up here. Thursday we topped out. And I'm going to leave this line in place as well, because this little candle, that red candle, tells us that it's almost like what they call a hanging man. That's a bearish sign. And so I think that the spiders are going to pull back because there's a gap below the market right here. So this line is going to stay intact for next week. I don't have to erase and I don't have to change anything because this is going to be my price target in an attempt to fill that gap right there. Now if we look at the Qs, which is the Nasdaq market, you can see that same thing followed as the spiders, where we moved up early in the week, gapped up here on Wednesday. We still have an open gap here from last week. And interestingly enough, today's volume, if I zoom in here, you'll see today's volume is slightly less than what we had on Thursday. So I will erase these lines just to kind of keep this in order, but I'm going to keep that line moving in a downward direction. I think that the overall markets, the Dow, eventually will start to pull back with the S&P, the Russell 2000. And so I think this is what we're going to see for next week with regard to the forecast. Remember, keep an eye on that gap. Many times I've staked my reputation on the fact that gaps fill, and I do believe that that gap will fill eventually, and we'll keep an eye on that so you can see, once again, the accuracy of technical analysis, particularly when it comes to gap trading. Now, finally, the VIX. Again, interesting. The VIX is now on a new record low. Look at this. The VIX moved up early in the week. I still think it's going to go higher. And this little candle right here, this little red candle, today's low, broke down below that key support level. And when you have the volatility index on record lows, understand that volatility index is not a stock. It does not trend. It oscillates. And it's inversely related to the S&P 500. So if the VIX is on a record low and it oscillates, that means eventually it's going to start moving up. And if the VIX starts moving up, it means the S&P will start to move lower. And we already talked about that and how the S&P could pull back to that moving average to fill those gaps. Now, this coming Monday, the 24th, we're having an open house Q&A session. It is open to the public this month in July. We're doing a promotion where the general public is open and invited to come to this general session. We normally reserve this only for members, but what I want to do is invite you so you can invite your friends, family. It's free. All you have to do is go to our website, themarketguys.com, scroll down right there, and you'll see a link that will bring you to the registration page. Just click on that link, and it'll allow you to type in your name, the city you come from. You can choose the state if you like, and then just click on the register button and your seat is reserved. You can submit stock symbols to me. I'll analyze those stocks in front of the group. I'll answer your questions, and we're going to have an action-packed hour of fun and looking at the markets. It's something I look forward to each and every week, and I hope you can join us then. Again, that's Monday the 24th. It starts promptly at 8 p.m., lasts for 1 hour, and again, that's on Eastern Time. So have a great weekend, and we'll talk to you on Monday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.